Hi and welcome to Markets Tomorrow. I'm Neeraj Shah.
Hi everyone, I'm Avan Dabash. Let's kickstart the show by introducing our three experts. They'll be joining in over the next half hour to assess what is in store for us tomorrow. Sandeep Bagle, founder and managing director, Aptar Technical Advisory Services, is with us. We've also got Nipun Mehta, founder and CEO at Blue Ocean Capital Advisors. Nipun, would like to start off with you. No doubt we have seen quite a bit of selling pressure. It has been offset in today's session given that 6,000 is back. But what remains worrying is that most of the FIIs have been pulling out quite a bit of money. There have been quite a few outflows coming in for the Indian markets. How long do you see this trend persisting, and when do you see that gush of liquidity entering the Indian markets again?
Well, I think the positive part of the last few trading sessions is the fact that the markets have recovered from their lows during the day, which does indicate a degree of buying at lower levels. I think the clear anticipation for the next few weeks clearly is that range-bound movement will be there, but there will be volatility that will be there within this range that is there. But clearly headwinds we're not out of the headwinds, whether they are global headwinds or domestic headwinds. I think we've seen a bout of uncertainty as far as global headwinds was concerned, in terms of taper, in terms of currency movements in a lot of the countries. I think the domestic headwinds will clearly depend not just on weekly announcements or anticipation of what could be the election results could be, but also clearly on the broad sector performances that we've seen. We've seen clearly mixed performances, better than what was anticipated, but sector performances really being mixed. You've seen a mixed bag as far as capital goods is concerned, banking is concerned, whether they're large caps or mid caps. So clearly that kind of uncertainty continuing will ensure that this kind of volatility will continue given all the domestic and global headwinds that are there. But the FII liquidity, my sense is that gush of liquidity can only come about when election results are clearer. Till that time, you'll continue to see the moving in, moving out, either based on taper, or based on some specific announcements, FDI inflows that we've seen for some of the acquisition of large chunks of shares that can keep continuing to come in. But when you look at secondary market inflows, that's not going to be thick and fast till there is certainty as far as the domestic political situation is concerned.
Well, yes, that is an important point. Just watch out for that whole situation around it. But Sandeep, I think what lent that bit of supporting hand today was the CNX IT and the way that index moved up and gave a bit of a show to the Nifty. How do you think the IT stocks fare in the next few sessions?
Neeraj, I think the CNX IT is clearly bounced back from an extremely oversold zone, and at a level of 97.18 levels, I would talk of a bounce back continuing. Probably another 100, 120 points, 98.30, 98.50, that range. So in that sense, we will see some more upside on the Nifty. I don't see any single sector or any single set of stocks which are extremely weak. Some kind of a correction, probably yes. So in that sense, I would be comfortable talking of at least a 40-50 point, 1%, 1.5% upside on the Nifty. And who knows, probably some follow-up buying comes in tomorrow. We may even see 6100, 6120, 6150. So broadly the range, I would talk of the bottom has been made in the short term. Maybe over a little longer time it may be broken, but 5950 and 6150 is the range for the Nifty over the next few trading sessions.
Sandeep, what is it that you will be doing within HCL Technologies? Because it might have recovered from the day's lows, but there's no denying the fact that for the last 3 days the selling pressure has been on.
Aman, absolutely. HCL Technology is certainly not the strongest stock in this space, and it is moving up with the market. So I would not be that keen on buying it. If at all I have to buy some stocks in this space, it has to be a Tech Mahindra that too on declines, or maybe a TCS. And in case the market corrects or moves sideways or consolidates, I won't be surprised if HCL moves down by another 3 or 4%. 1360, 1350, somewhere around that. So obviously HCL Tech is not one of the best buys as far as the immediate trade is concerned.
By the way, speaking of IT, Cognizant, the Q4 numbers came out, revenue up 2.2% on a quarter-on-quarter basis, 20% on YOY, but thing to look at it sequentially, revenue has risen to $8.84 billion. They've guided to at least $10.3 billion of revenue for 2014, which is a 16% YOY growth. I believe this would be in line with what the NASSCOM guidance would be stating as well. So that's Cognizant. Nipun, just one quick word really. Cognizant guiding to a 16% growth 2014, impressive, and you would think that will hold up for the other IT names as well?
Yes, sir. The 16% is definitely impressive. We've not seen that through the entire space. There have been companies which have shown their growth of this level or thereabouts, or in certain cases even higher. But I think across the entire space, probably very clearly you're seeing a significant turnaround happening. I think next couple of quarters will probably ensure that virtually 75% of the companies in the entire space will show this kind of growth, which obviously leads to the thought that there could be re-rating as far as a lot of the stocks are concerned, large caps or mid caps. And as and when you see the March quarter results coming in and the benefit of currency sort of being at these levels or depreciating a bit, clearly there could be that gradual bout of re-rating that will come about through the entire space.
Run us through, Nipun, your assessment as to what we can see from Ambuja and ACC come tomorrow.
Yes, I think clearly you're not likely to see the best quarter that's there for the cement space, including both these companies. Really, these two, at least Ambuja has been at the higher end in terms of margins, but really when you look at the fact that generally the December quarter and the March quarter are reasonably good. Typically the March and June are the best for the cement industry, while the monsoon quarter is not, the September quarter is not. December has probably a revival of the construction season, but we've really not seen the best of volumes in that quarter. There has not been the kind of revival that one generally anticipates. But it's not been as bad as what the overall economy shows or the IIP numbers show. So it's not that you're likely to see a drastic cut as far as top line growth is concerned. Yes, probably not as enthusiastic numbers as you typically see a December quarter for the cement industry to be. We've seen one or two results which have come about reasonably good, smaller companies, but they've outperformed. But clearly, when you look at the larger companies and the fact that pricing power doesn't seem to exist significantly, and obviously operating margins are under pressure, you might not see the best of results. No dramatic change, but definitely not the best of results for both these companies or the cement pack.
Actually, speaking of numbers, I just want to speak about Ranbaxy today because of the price action. Before we speak about Bank of Baroda, which comes out with numbers tomorrow, just because of the kind of move that Ranbaxy did today. And Sandeep, this 5.5% up move on the back of really strong EBITDA numbers, is this something that enthuses you, and does it show on the charts? Would you buy a Ranbaxy?
Niraj, it does show on the chart, specifically a move from a drop from a 480, 490 levels down to 300, 310. So I would still consider this as a bounce back move, but then the kind of volumes that have followed the price pattern today. So very clear, some more upside scenario, yes, at 340 I would talk of a 360, probably a 370. But then the move can be a little bit jerky, so one has to exercise that caution. Nearer those levels, you can again see some sharp falls. So immediate trading upside, yes, to the tune of 5 to 6%, but I would exercise extreme caution.
Apart from that, in the banking space, of course, we will be watching out for BOB, which is going to be declaring its numbers come tomorrow. And in fact, we should just, the stock ahead of those numbers, it ended rather flat in today's session. Nipun, what is it that you're expecting when it comes to Bank of Baroda? Because some of the PSU banks have managed to, remain fairly resilient in terms of the asset quality, which has seen a dip on a sequential basis. When it comes to BOB, we're expecting a very muted quarter, profits at just about 1,020 crores.
Sure, but my sense is you've really seen unpredictability as far as results of the PSU banking space is concerned in terms of the kind of provisioning that is there. We've seen banks like PNB where there have been a string of 3 or 4 quarters where there has been significantly higher provisioning. suddenly you see a spurt in profitability in a particular quarter. So the results for the entire PSU bank space have been unpredictable, depending on the kind of provisioning they're doing, the kind of restructuring that is happening. Same probably goes for BOB. I think it's been one of the better banks in terms of the overall asset quality in comparison to some of the other larger ones that have been around. The predictability has been a little more in terms of both provisioning and the profitability and the NIMs that is there. So while no significant positive surprise could be expected, I think it could have just about a flattish quarter that could be there, relatively muted in anticipation in comparison to a lot of the other ones, at least in comparison to the private sector banking space that is there in terms of growth and profitability.
Okay, non-earnings, just a couple of stocks that did very well for themselves today. And Sandeep, the entire cap good space was abuzz. The Voltas, Cromptons, even a Havells was extremely active. Do you have any buy calls here?
Niraj, I have a buy in a Voltas. I had a call in a FNO show also today, and I still feel that at this price there is some more upside at a current level of 114, 115. I would talk of a 121, 122 target, so a very clear 5-6% trading upside. So a little bit of a correction of 1 or 2 rupees, I would be very comfortable buying, or even at the current levels. And all of them are looking good, but I think Voltas will be an outperformer.
Let's focus in on some stocks that will be in focus. And we've got Gargi standing by first up. She is joining in from our research team to tell us what exactly the dealing rooms are talking about. Gargi?
Well, firstly, I want to talk about our Aurobindo Pharma. Some buy recommendations coming in on this counter. Remember, the company is expected to announce its earnings tomorrow, the third quarter earnings. There are expectations that the EBITDA will come in at about 525 crore rupees versus an estimate of about 413 odd. So if that is going to be an outperformance on the EBITDA front, we may see continued buying in that counter. Look at the counter today again, 2.5% up move that we already saw. There has been, accumulation of the stock over the past couple of sessions. Probably we will see buying coming in post the results also. Look at another stock called Cox & Kings. That's one counter which has been in focus. We know that there have been rumors about, Sterling Holidays being acquired by the company. There were some news reports also today regarding the same. There had been buying over the last few trading sessions. Probably it's going to continue. It's been weak in today's session, about 0.5% cut that we saw. But we are hearing from our dealing room sources that HNI buying will continue in that counter over the next week. And if you look at the stock over the last 7 days, we have seen some gains coming in. So any, news about this kind of acquisition of Sterling Holidays is going to be positive for Cox & Kings.
Thanks for that, Gargi. Some stock recommendations for tomorrow as well from Sandeep Wagle. Sandeep, what is it that you're recommending in trade?
Niraj, I would go with a buy in a Godrej Industries, stop loss of 270, target of 295. The second call is a buy in Voltas. I talked about it earlier, stop loss of 110, target of 123.
Nipun, what about you? What is it that you find attractive from a long-term perspective for investors?
Well, I think clearly there has been a very categorical turnaround as far as the IT space is concerned, and when you look at the results that we've seen as far as some of the biggies are concerned, I think clearly this is one space where you're likely to see shift of ownership coming in from some of these larger companies which have not shown consistency into these companies as compared to the others where you've seen that consistency that has happened and are differently rated. So when you look at, let's say, an Infosys or a Wipro, which did show fairly stable or improved results, our sense is probably just one more quarter or a couple of quarters of these kind of stable, consistent results, and you could see that re-rating happening. You've already seen that happening over the last since the time Infosys results came out. There appears to be clearly a shift of ownership happening from, let's say, TCS onto an Infosys. You're likely to see that continuing. We've seen a 6% drop as far as Infosys is concerned from the peak. I think drops like these are opportunities to enter into them. Again, a stock like Wipro probably hasn't still been re-rated since the time its results came out. But 1 or 2 quarters of these kind of stable results, and you're likely to see again some kind of re-rating happening. So our pick on in the IT space will be a couple of these large cap stocks.